guys, let's go over the week that was. Here is the S&P 500. It's just been on a tear to the upside. Nothing but higher highs, as you can see on the chart, and higher lows. This means that every chance it gets to want to break down, people are stepping up and saying, hey, I'll take it, I'll buy it here. Whether it's corporate buybacks, the Fed wanting to play ball, or something brewing in China to the upside, something positive, which we all hope will occur, this market just wants to, it's using all the shorts as fuel for the fire to the upside. Now, you can see this because every time it wants to break down, it's being bought. More liquidity is coming in. It says, okay, this is a deal here. Every time it wants, so look at these arrows. Every time it wants to come down, people say, no, this is a deal. I'm gonna buy this. Now the longs, what they're likely doing is they're putting their stops just underneath those recent higher lows. So if you see these start to get taken out to the downside, then you have a chance at a bear move to the downside. But other than that, this is screaming to the upside. And I tell you what, the previous highs at 28.20, the longs are gunning for this and the market's pushing for this higher and higher. And that's the uncle point for big shorts. That in that congestion area before we fell to the downside in December, before we started pushing down to that point, that's the uncle point for all those people that took bets to the downside. That's their uncle point to the upside. So it's very likely, and this is not financial advice, we're gonna see that getting taken out to the upside. Now, if you're long, let's say you bought near the lows or you got in at a previous price that you're in a profit, consider, this is just consider, taking profit once we breach that high. Don't even, I mean, consider even before that buying puts or put spreads. But what you see here is the market just wants to tear to the upside. But it doesn't matter if you don't take profit, where to take profit, and that's when the shorts will cry uncle. And that's probably around the 28.20 level. I like 2800 myself, and new highs aren't out of the question at all. Now, given that, it doesn't mean that we can't have major moves to the downside. Whatever news events are occurring, they come out later. The market tells us what's going to occur, and it's a great indicator of what's to come. So that it just goes to show that trying to catch the news events, whether it be corporate earnings, to be honest with you, it's a fool's errand to try to pick this. The market's telling us it wants to head higher and it's going to take out those shorts, very likely. Let others do the heavy lifting here. Now, with all this being said, let the market come to you. If you think the market's going to get to 2800 or 2820, let it come to you. You don't always have to be involved. You don't always have to have something out there or something invested, because it's a lot better to sell up there than it is to sell here. Now, also, given this, let the volatility index die down a little bit more, I should say, because it's being crushed. That means that the lower the volatility index goes, by and large, the cheaper the premium you pay for options is, especially when you're looking at protective puts. Now, if we get to that 2820 level or that 2800 level, the VIX will be down from here, very likely. Not only that, but you'll be able to buy strikes that are more favorable to locking in profit or taking short positions at that point. So with this being said, it's always good to let the market come to you. Treat your account, whether it be a long-term investment holding or a short-term trading, whether that be on the daily, which I strongly do not day trade. It is not worth it, okay? It's just, psychologically, it's not to your benefit. Now, swing trades, 2-3 days, weeks, months, for sure. Think about that. And with that being said, your account is like a gun. Think of the analogy like this. It's like a gun. You have only 7, 8, 20 bullets. You only have a certain amount of shots that you can take. And you shouldn't be running around all over the place, shooting at everything you think looks good. Really spend some time doing your due diligence on when a market will have uncle points back and forth. Then you can take your shot, which is far more clear at that time, and you've prepared for it, and you can slowly take your aim and shoot at that particular spot. This is true with all markets, really. Let the market come to you. Let others do the heavy lifting. much.